Did you know your $100,000 in the bank could earn you over $5,000 this year just by sitting there? Thanks to today's 5.13% interest rate in the US, your money could be working harder for you. In the US, the current interest rate is 5.13%. This means if you have $100K in the bank, you can earn $5,116 in the year. Pennies, right? What if your $100,000 could grow into millions with a simple strategy of investing in Fidelity index funds? In this video, I will show you the 5 best Fidelity index funds that can earn you $225,000 a year in dividends. Also, I will show you how much your investment can grow in 10 and 20 years. And most importantly, when you should not invest in Fidelity index funds. If you don't want hours of screen time looking at charts and doing the analysis, you can pick Fidelity index funds and benefit from the low-cost, diversified asset class and see the magic of compounding, making you a millionaire. Next in the video, you will get the top 5 Fidelity index funds and expected earnings in 10 and 20 years by investing $100K by investing in each of them. And at the end of the video, I will share why you may not want to invest in the Fidelity index funds. The first on our list is the Fidelity Multi-Asset Index Fund, FFNOX. This fund is an excellent choice for investors who want balanced exposure with moderate returns, low expenses, and average risk. It's well diversified, investing in a mix of US and international equities as well as bonds, giving you both growth and stability. So far in 2024, YTD returns stand at 15.27%, meaning if you had invested $100K at the start of the year, your portfolio would now be worth $115,270. In the last year, the fund returned 27.95%. The fund allocates 51.03% to domestic equity funds, 23.73% to developed market equities, and 10.34% to emerging market equities. It also balances risk with 6.91% in U.S. investment-grade bonds and 5.03% in long-term U.S. Treasuries. Looking at the bigger picture, over the past 5 years, FFNOX has grown 39%. If you had invested $100,000 5 years ago, your portfolio would now be worth $139,000. For comparison, SPY would have turned $100,000 into $232,994. But there is higher risk, but bigger returns. Now, let's consider what happens over the next decade and beyond. With an average annual return of 7.8%, your $100,000 investment in FFNOX could grow to approximately $212,950 over the next 10 years, thanks to the compounding effect. Over a 20-year period, your investment could expand to $453,123. By the 20-year mark, your initial $100,000 could be generating $2,700 per month in compounded return. Not so convincing? The next one on the list will surely make you a millionaire. The second we have on the list is the Fidelity 500 Index Fund. This focuses on the U.S. large-cap stocks in the S&P 500. Year-to-date, YTD is 23.83%, which means if you had invested $100K in January, you would have profited $23,830 just from the value appreciation. This is a high-return index fund with a mid-risk profile. Fidelity 500 Index Fund has 31.66% invested in information technology and includes Apple, Microsoft, Nvidia, Amazon, Meta, and Google in its holding. Fidelity 500 Index Fund soared 95.25% in the last 5 years, 62.20% in the last 2 years, and over 33% in the last year. This pays a dividend of 1.26% quarterly to all investors. Currently, Fidelity 500 Index Fund is trading at $223. The optimistic price target for Fidelity 500 Index Fund till October 2025 is $263. The average price target is the same as the current price, and the lowest price target $181.90. This means that if the price follows the predicted bullish trajectory and reaches just $250 in 1 year, your $100K can turn into $117,148. That's a 17% increase in 1 year. In the next 10 years, considering the compounding effect, this can turn into $562,211. And that's not the end. In the next 20 years, your $100K will turn into $2,737,063. So, once your $100,000 investment grows to $2,737,063 over 20 years, you could be earning approximately $38,060 per month. At this point, your investment would be growing at an exponential rate, and you would be making $100K, your initial investment, every 79 days. Amazing, right? But hold on, we still have left 4 more Fidelity index funds left in our bucket. Moving forward, we have the Fidelity Large Cap Growth Index Fund, which focuses on high-growth U.S. large-cap companies. This fund primarily targets companies with strong growth potential, especially in sectors like information technology, which makes up 48.68% of its holdings. This fund's largest contributors include top companies from the information technology and communication services sectors such as NVIDIA, Apple, Microsoft, and Alphabet, both Class A and Class C shares. FSPGX promises the highest returns with the lowest expenses and above-average risk factors. If you're looking for long-term capital appreciation, this fund has a proven track record to consider. Year-to-date, YTD return is an impressive 26.14%. If you had invested $100K at the start of the year, your portfolio would have already grown by $26,140 purely from value appreciation. This fund has delivered strong performance over the last few years. In the past year alone, it has gained 2.19%, while over the last 5 years, it surprised with a growth of over 136%. That means it has more than doubled in value, showing strong returns for long-term investors. Now, let's break this down. If you had invested $100,000 last year, your portfolio would now be worth $140,480. Over the last 3 years, the fund has averaged a growth of 30.68% annually, which reflects consistent performance. Currently, this fund is trading at $37.23, and looking ahead, the highest price target is $49.80. The average price target sits around $41.56, while the lowest is $32.87. However, if the price rises to $45 in 1 year, your $100,000 could grow to $120,821, showing a solid 20.82% increase. But let's consider the long term. Over the next 10 years, keeping in mind the compounding growth, your $100K investment could potentially grow to $748,562. And if you extend that time to 20 years, your investment might surge to an incredible $7,007,419. At this point, you could be earning over $46,716 per month, and your initial investment would be growing exponentially. You would be making back your original $100K every 64 days. The next Fidelity Index Fund you may consider investing in is the Fidelity U.S. Sustainability Index Fund, FITLX. This fund is a great choice if you're looking to align your investments with sustainability, as it focuses on companies that meet strong environmental, social, and governance (ESG) criteria. It's designed for those who want to see both financial growth and a positive impact on the world. Year-to-date, YTD return for this fund is 23.15%, so if you had invested $100K at the start of the year, your portfolio would have grown by $23,150 so far. Over the past year, the fund has grown by 36.12%, which is impressive considering the market's volatility. This fund invests heavily in information technology, which makes up 30.59% of its portfolio. Other major sectors include financials, 10.88%, healthcare, 10.27%, and consumer discretionary. Looking at the bigger picture, the fund has grown 106% over the past 5 years, showing long-term stability and growth potential. In just 3 years, it's returned 29%, proving its consistency in delivering returns. Currently, the fund is trading at $26.15, and analysts have set price targets with a high of $32.90, an average of $28.33, and a low of $23.59. Assuming the price reaches $32.90 in the next 12 months, your $100,000 investment could grow to around $125,799, a 25.8% increase in just 1 year. But what about the long term? Over the next 10 years, thanks to the power of compounding and continued growth, your $100,000 investment could grow to $682,362. And if you stretch this out over 20 years, it could soar to an incredible $5,688,032. At this stage, your portfolio would be generating around $37,920 per month. That's some serious income from a sustainable investment. One more thing to consider. Fidelity pays a 0.92% dividend yield, providing you with steady passive income as your investment grows. Sustainability and returns? It's a win-win. But before you finalize your investment, we still have one left on the list. Next on our list is the Fidelity Mid-Cap Index Fund, FSMDX. This one is focused on mid-sized U.S. companies, making it a strong contender for those looking to diversify beyond large-cap stocks, as the mid-cap stocks will have a mix of volatility and room for growth. So far this year, the year-to-date YTD return is an impressive 16.84%. If you had invested $100Ks in January, your portfolio would now be up by $16,840 just from the increase in value. This fund is more into the industrial sector, making up 17.33% of its total holdings. The prominent companies in this fund include Palantir Technologies, Aflac, and Arthur J. Gallagher & Company. Looking back, the Fidelity Mid-Cap Index Fund has seen a solid 55% growth over the last 5 years and a 30% growth in just the past year. Now, let us take a quick look at what this means for your money. Currently, the Fidelity 500 Index Fund is trading at $34.95. The optimistic price target in the next 12 months is $43.99, while the average price target sits at $37.79, and the lowest price target is $31.76. This means that if the price grows as expected, it can reach around $43.99 in 1 year, and your $100,000 investment could grow to approximately $125,883. That's a 25.88% increase in 1 year. Looking ahead, over the next 10 years, factoring in the power of compounding, this investment could grow to $956,147. And that's not all. Over the next 20 years, your $100,000 investment could turn into $9,144,091. At this point, with your investment at $9,144,091, you could be earning approximately $53,013 per month. By this stage, your investment would be growing exponentially, and you'd be making back your initial $100,000 investment every 57 days. Now, if you can afford to expose your portfolio to higher risk, you can take a look at the Fidelity Small Cap Index Fund as well. However, due to their higher risk profile, we have not added it to our list to protect our viewers' investments. Now, coming to why you should not consider investing in Fidelity index funds. If you are expecting higher short-term gains with low risk tolerance, this asset class is not for you, as it does magic with patience and time. This concludes today's video. Don't forget to like the video and subscribe to our channel. Thanks for watching, and see you in the next video.